What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about how my savings account just gave me another pay raise. I think the third or fourth, maybe even the fifth in the last couple of months. And also, I wanted to talk about why I'm using a savings account when I used to be very, very against them. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. And of course, make sure to download Webull and fund your account. They're going to give you up to 12 free fractional shares just for doing so. Even if you deposit as little as a penny, it still works, it still counts, you still get your up to 12 free fractional shares. And for the month of June, the promo that they have going on right now is for every friend you refer, you're going to get a small cash bonus. Refer one friend, $20 cash bonus, two friends, $40 cash bonus, three friends, $60, four friends, $100, five friends, $300, and six friends, $480. So if you refer six friends by the end of the month, they're going to give you $1,000 in cash to invest however you'd like. It's part of their advertising budget. Instead of wasting money on billboards and TV commercials and stuff like that, they reward us for helping us build their platform with them. Webull link in the description. Everything is linked in the description. All right, so on to savings accounts. I'll get myself situated here. As usual, my video is not going to be necessarily something to watch, more so something to listen to, like a radio show or a podcast or something like that. So don't think you need to sit here and stare at the woods that I'm in right here. Don't think, oh, what am I watching? Don't watch, listen. All right, so let's talk a little bit about savings accounts. The savings account that I'm using currently is the second savings account that I've ever had in my life. The first savings account was closed due to inactivity and for me not having any amount of dollars in it. The bank said, hey, you're not using it. You have a total balance of $0.00, so they closed it, which was fine. I think it came with the checking account that I opened up. Anyway, that was the first time I had a savings account. I had zero interest in it, knew that I wasn't going to be using it, knew that I didn't care about it, so whatever. Years had gone by, and I was never really interested in savings accounts in the first place. I was like, it's not really going to do much for me. What's 0.01% interest? You know, how's that really going to help me? What's that going to do for me? So I was never really interested in savings accounts. Then when I became interested and discovered the world of finance and got much more heavily invested in the game, saving, budgeting, investing, a little bit of stacking, I became anti-savings account because it made no sense to me. And I've made plenty of videos on this in the past. Plenty of videos talking about how I don't agree with savings accounts. I don't like savings accounts. It makes absolutely no sense to me. What is 0.01% interest going to do for me? You know, even on a good year, I'm losing to inflation. And by good year, I'm talking about like 2% inflation, which is pretty normal. And by the way, some people might not think that's normal. They're like, oh, even 2% inflation is not good. No, it actually is good. But the idea is for the economy to be growing alongside it. The idea is for there to be 2% inflation and for the economy to be growing by 2% or preferably a little bit more. Hang on. How you doing? Good. So, on a good year, where the economy is growing alongside it at roughly the same rate or same pace as inflation, kind of balances everything out. You want there to be a small amount of inflation. You also want the economy to be growing by at least a small amount. So inflation's not the problem. The last year or so, it's been a problem, and that's because we've been seeing crazy high inflation, which is bad enough if the economy is not growing at all, but our economy was on the decline while inflation was on an incline. So it's like a double whammy. So anyway, my thesis was that savings accounts are stupid because 0.01% APY, or interest, is going to do absolutely nothing for me. I have to have thousands and thousands of dollars in there just to make $1 a year. Made no sense. My currency would be losing. But something changed less than a year ago for me. I went from having no interest in savings accounts to being very, very against savings accounts to now having one and contributing to it on a weekly basis. Now, I'm not going to talk about what bank I use. I don't necessarily think that's right because I'm still not very, very pro savings account. I think there are better things to use. I think there are better ways of going about saving or preserving wealth or investing, accumulating more wealth. I don't think savings accounts are the way to go long term. I'm using a savings account in the short term. Now, I do have a screenshot right here of my current APY, which is funny because I took this screenshot right before filming the video because, oh, okay, I'm going to use that for the video, and it turns out I've gotten another pay raise since I decided to make this video just yesterday. My current APY, as you can see right here, as you can hopefully see right here, 4%. 4% right there. That's my current APY on the savings account that I use. Now, when I opened up the savings account, it was 3%. And I thought that was fairly decent. I said to myself, there's something that I want to save up for. My idea was to get myself a cargo van, convert it into basically, or not even really convert it. It was going to be a no build. I wasn't going to really do anything to it. But the idea was to get a cargo van and use it as a weekend camper and also have a minimalistic office setup. That way I can also use it as almost like a mobile workstation, a portable office. I wanted to be able to film, edit, and upload videos from the back of the cargo van. I wanted to be able to partially run my business from the back of the cargo van, and I also wanted to use it as a weekend camper, and I would document that as part of my business as well. That was the whole idea. So I said, you know what? While I'm saving up for this cargo van, I'm going to use a savings account to do so because I need to have the currency in an account in order to make the transaction. And with the bank at the time offering 3%, which is now offering 4%, or paying me 4%. And like I said, I'm not going to talk about the name of the bank. If you go, it's one of the most popular banks in the world. If you go and Google 4% APY savings account, I'm sure you'll be able to find it. I don't mean to be all secretive over here. I just don't want to necessarily promote a bank and be like, oh, go with this bank or use this savings account, because I'm just explaining what I do. This is not something that I would ordinarily recommend. Like I said, this is just something I'm utilizing as a tool in the short term. So anyway, I started parking a little bit of cash in this savings account, knowing that it would only be in there temporarily, and then I'd take it out and buy what I want to buy. See, the reason I'm not a big believer in savings accounts in the first place is because I'm not really a believer in saving currency like that. If you're going to save currency, I think you should only be saving it to make a large purchase or saving it to make an investment. I don't believe in saving currency long term. I think that's a bad idea. Actually, I know for an absolute fact that's a bad idea, and it's not something that I'm not really aligned with. So anyway, I started parking cash in there temporarily, on a weekly basis because my new or somewhat new job, I've been at this job for almost a year now, pays me weekly. First time since my very first job that I've been getting paid on a weekly basis, and I didn't realize how great it was. I didn't realize how nice it was to get paid every 7 days. It's pretty nice. See, I've spent a majority of my adult life working at this other job, which I left, I think, just about a year and a half ago, and they paid every 2 weeks, which is pretty standard. Get paid twice a month. While also running my business for the last couple of years, where I get paid once a month. So years and years and years have gone by, and I've just been used to getting paid every 2 weeks from one source and paid once a month from another source. Not to mention, many of my dividend income investments pay me once every 3 months. So I'm used to my paychecks being, spread out a little bit further apart. But now I get paid every single week. It's pretty nice. So every week I can make a contribution to my Roth IRA. Every week I can make a contribution to my regular investment account. And every week I make a small contribution to my savings account, which was paying me 3% at the time. A couple weeks had gone by, and I checked, just out of curiosity, is it still 3%? I know it can fluctuate. Nope, not 3% anymore, 3.25%. I was like, oh, all right, I'll take it. Small pay raise. All right. Then I checked again, and they raised it to 3.3. Then I checked again, and they raised it to 3.4. Then I stopped paying attention, and about a week ago, I realized it was 3.75. I'm sorry, maybe a couple weeks ago, I realized it was 3.75, and then a week ago, I realized it was 3.9. So I knew that I wanted to make this video, and today, on my way out the door, I was like, let me log into my account really quick so I can get a screenshot so I can use it, in the video just for reference, and it said 4%. So I've gotten multiple interest pay raises, and I've only had this account open for a couple of months. Now, will it continue to go up? Maybe a little bit. I'm not necessarily expecting it to, but then again, I didn't really expect it to go up much from 3% in the first place. Who knows? It could go up higher. It could. It could be, at the top right now, 4%. It can go down a little bit, somewhere between 3 and 4%. I think that's fair, between 3 and 4%. Higher would be nice, but I'm not, asking for it. Like I said, this is all for the short term. But my plan right now, since I ended up, unfortunately, opting out of the cargo van, that was my original plan. My plan was to get a cargo van, and I was just going to use it as a weekend camper and, mobile workstation. Then my job transferred me. Our lease was up, and we were all getting transferred. I was under the impression that I was staying somewhat local. I was told by one of the directors who came in, they're like, oh yeah, we're keeping everyone close to home. They're not going to do that to you. Turns out they're not keeping me close to home, and they are going to do that to me, because they sent me as far away as they were contractually allowed to without being required to give me travel pay. Gotta love it. But as it turns out, it's not that bad of a drive. It's a bit of a hike, but it's a straight run there, so no problem. But I needed to upgrade my car, and I was like, I can't go with a cargo van for this. See, my plan was just to, keep driving the way that I was driving, keep my original wheels, and get a cargo van just for the business. But now that I was getting sent kind of far away, not that far, but way further than I was expecting, I was like, I have to upgrade my actual wheels. So I went and got a new car instead, something that I'm confident will last me the next 5 to 10 years with absolutely no issues at all. And I didn't even use my savings account to buy it. And I've been continuing to make weekly contributions to this savings account. every single week since I opened it up. And I don't remember exactly what month. It was sometime, I think it was at the end of 2022. So I've had it for less than a year, maybe like half a year. I don't remember exactly. I'll say December. But I make weekly contributions to this savings account. And ever since I noticed that the interest rate was going up, I've been adding a little bit more than I would ordinarily contribute on a weekly basis. Now, this isn't the only account that I make weekly contributions to. I also make weekly contributions, or technically I make daily contributions, but I transfer over funds once a week from my checking account on payday so that I can have enough for the week to make daily contributions to my regular investment account. This is my dividend income or dividend growth / dividend income account that I've been working on for, at this point, maybe 3 or 4 years. But I also make a contribution to my Roth IRA. It's a tax advantaged retirement account. If you make a $125 contribution every week or $500 a month, every month for the year, you're going to hit the maximum contribution, the contribution limit of $6,500 for this year anyway. And that's what I'm currently working on. My goal is to max out my Roth IRA this year. I did not last year, but my goal is to do it this year and hopefully every year in the future. And I do this on Webull, which, once again, if you download the app and fund the account, you're going to get up to 12 free fractional shares just for doing so. Refer one friend, they're going to give you $20, 2 friends $40, 3 friends $60, 4 friends $100, 5 friends $300, 6 friends $480 for a grand total of $1,000 in cash to invest however you want. It's part of their advertising budget. Link in the description. Please do not pass up on an opportunity. But those are just a couple of things that I do on a weekly basis. I make a contribution to my Roth IRA, a contribution to my regular investment account, and a contribution to my savings account. Now, as for the savings account, I do not plan on keeping it long term. Like I said, I'm not a believer in savings accounts for the long term. I'm a believer in savings accounts, or should I say high yield savings accounts, for the short term, during times like these where rates are high, so that I could generate another, granted a small, but another stream of income. This one would be classified as interest income. It's one of the 7 most popular streams of income for the average millionaire. The average millionaire has 7 streams of income, and one of those 7, typically interest income. Now, do I plan on being an interest income millionaire? Absolutely not. Do I plan on even earning interest income long term? Absolutely not. Not my thing. But in the short term, while rates are high and while I'm saving up, now I'm going to be passing this guy again. Let me hang on. Excuse me. Thank you, sir. So you might be wondering, you opened up the savings account because you were saving up for a cargo van, and now cargo van idea, which by the way has been an idea for years and years and years. I still want to do this, but right now it just doesn't really seem to make sense. It's something that I'm moving the goalpost on that. I still want a cargo van, but I'm not currently saving up to get it, and I don't want to get it anytime in the near future. I definitely want to get it at one point though. But you might be wondering, you opened up the savings account in the first place for a cargo van, job transferred you further away than you were expecting to get transferred, which, by the way, I'm getting transferred again now. I got 9 days from today will be my first day at my new location, different position. So anyway, you might be wondering, open a savings account in the first place to save up for a cargo van. You want to park cash there, little by little, add to the account, generate a little bit of interest income on a month-to-month basis, and slowly but surely work your way up to being able to purchase a cargo van. But now the cargo van has been scrapped for the time being, but you still have that savings account and you're still adding to it? Yes, that's true. What am I saving up for at the moment? I wish I had an answer. I don't know exactly, but my goal right now is to continue making weekly contributions to the savings account, continue generating some interest income in the short term, and I don't know how long short term is, but at the moment, I think I want to keep it rocking and rolling while rates are high, and then if rates get slashed, then I will pull my currency out and park it elsewhere. But at the moment, I don't really have a sense of direction with this particular pile of currency. I'm not saving up for anything in particular. I just figured it's probably a good idea to keep it there, let it generate some interest income every month, keep making weekly contributions, let that compound effect do its thing in the short term, while I figure out where I really truly want to put that currency. Do I want to put it in silver at this time? No. Do I want to put it in gold at this time? No. Do I want to put it in individual dividend stocks at this time? No. Do I want to put it in an index fund at this time? Kind of. In my opinion, I believe that would be the smartest idea long term. Or do I want to continue saving up for my first small rental property? Do I want to save up and get myself a small, modest-sized house, and I can rent out a floor of the house, top floor, bottom floor, or basement floor, or something like that? Is that what I want to do? It is somewhat what I want to do, and my eyes have been on real estate since the very beginning. My eyes have been on real estate since before I even got into the stock market. My eyes have been on real estate since before I got into silver and gold. That has always been the ultimate goal. That has always been the end goal for me before I even really fully dove into the world of finance. It's always been real estate. I currently own zero real estate. I've never owned real estate in my life. I have a little bit of money in real estate investment trust, REITs, through the stock market, but I do not currently, nor have I ever, owned physical land or a house or anything like that. But it's always been the plan. I've always wanted to do that. That's always been the primary objective. That's been the mission. And my plan was always do it through business and my job and eventually get myself to real estate. In recent years, I've added to my method or my vehicle to take me to real estate, precious metals, stocks, more forms of business, more forms of investing. Real estate has always been the ultimate goal, but with this new job that I have, I don't know if I'm going to end up anywhere long term or if I'm going to be moved around. Plus, with everything that I have going on right now, I don't have a great deal of spare extra time. I have one day off. I work 6 days a week, and on the 7th day I come out here and I film a bunch of videos. So right now, the savings account, I'm continuing to make weekly contributions to, but I don't know if it's gonna be anything directly tied to real estate. Because real estate, you know, you hear all the time, oh, passive income from real estate. Like, real estate is very, very, very hands-on. And if you want real estate to be completely hands-off, you have to hire, you know, property managers, you have to hire landscapers, you have to hire like a bunch of people. Like, if you want real estate to be entirely passive, you have to have enough money to pay other people to do everything that needs to be done so that it can be passive. Real estate is very, very hands-on. I don't care what anybody says. If you want to become a real estate investor, it's active income disguised as passive income. And right now, I don't have the time to be hands-on with real estate. I don't have the time to be hands-on with very much at all. That's why once a week, I'll come out here and I'll film 1, maybe even 2 weeks worth of videos. That way, I could be as hands-off with YouTube and hands-off with my business as possible, because of how much time is tied up with everything else that I have going on right now. So the savings account, for the time being, is going to continue doing what it's doing right now. There will be weekly contributions made to the savings account. Interest income will be generated on a monthly basis, and the cycle will continue for as long as rates are high. As long as it's between 3 and 4%, or higher if they choose to go higher, but at least 3 to 4%, anywhere in between, I will be continuing to make weekly contributions. But for the time being, I don't know what the savings account is designed to be saved up for. Right now, it's just a place where I'm parking my cash while I decide what I want to do with it. The good news is right now, with my job transferring me again for a different position, different location, I'm a lot closer to the DYDSS headquarters. You know, currently, you know, I love my current job. I love my current position. I actually tried my hardest to stay, even though it's a bit of a hike to get there. I spend about an hour and a half on a bad day, 2 hours in the car between getting there and back. That's a lot of time. Sometimes 2 hours a day just spent in the car. That's 2 hours every single day that I'm not getting paid for. Multiply that by the 6 days a week that I work there. That's 12 hours a week that I could be doing something else with. But now I'm being transferred somewhere 11 minutes away. I was like, oh my God. I don't necessarily want, well, I don't want to say that I don't want. I like the position that they're sending me to do, but I really, really, really like the position that I currently have. Wasn't my decision, wasn't my call. They send you where you're needed. And I like to believe that I did a fantastic job doing what I was sent here to do. Now I'm being sent somewhere else to do something different, and my plan is to do a good job there. See, if you're going to do a job, I believe you should be, if you're going to do a job, you should do a good job. That's my belief. But 11 minutes away, as opposed to, you know, 40, 45 minutes away there, and 11 minutes back, as opposed to, you know, 40, 45 minutes back, hour and a half to 2 hours worth of driving every single day, there and back. Now, 22 minutes in total. Thank you. How you doing? I'm good, thanks for asking. Just stared at me. Nothing like walking through a woods and seeing some guy just standing still staring at you. Then again, he's probably thinking to himself, he's like, oh, look at that guy walking around talking to a camera by himself in the woods. What a weirdo, what a freak. He's probably not wrong. Anyway, this new job at a new location, different position. If I had it my way, it wouldn't have been my first pick, but it's gonna save me a lot of time. And now that I'll be saving even more time, and by the way, I'm getting really close to hitting 1 year at this company. which means I will finally be eligible to start making contributions through the 401k through the company. So that'll be another thing that I'm contributing to on a weekly basis. I don't exactly know what percent I should go with. I'm thinking 5% to start, because I don't want too much of my paycheck taken away. I do want the 401k to get rocking and rolling, but I have bigger priorities, such as my Roth IRA, such as my regular dividend income investing account, and for the time being, my savings account. Those are my preferences right now. 401k, out of those four things, 401k is ranked number 4 on that list of priorities for me, but it is a priority nonetheless. So I want that to get started. I want to start making weekly contributions to that. Tax advantaged. They'll take, if I go with 5%, they'll take 5% of pre-taxed dollars and invest it. So it'll be a little bit more than taking 5% of my post-tax paycheck and investing it somewhere. So that's good news right there. And not only that, now that I'll have a little bit more time on my hands, there's this other company that I'm eyeing. I don't want to make the switch. I don't plan on leaving my company and going over to that company. I'm thinking, what if I started working there part-time? Now that I have a little bit more time on my hands, I'm only 11 minutes away from home. This company has a location 2 miles away from the location that my main job is sending me to. I can leave work and go right to work. And how I understand it is that you can start making contributions right off the bat to a 401k with this other company, but you have to wait. See, with my current company, you have to wait a year. It has to be 1 year of service in order to start making contributions to the 401k. This other job that I don't even have yet, don't even know if I will have. I'm just thinking about it. Just crossed my mind for the first time in my life just yesterday. How I understand it is you can start making 401k contributions right off the bat, but you have to wait a year to get the company match, which would be pretty cool as well. Matt, start working on an additional 401k part-time right around the time that I'll become eligible for the 401k for my full-time job. So imagine I get 2 of those rolling. And with it being a part-time, just secondary job, just something to do on the side with, a little bit of some of the free time that I'll have now that I'm not driving so far, maybe I can contribute an absurd amount to that 401k. Maybe, just maybe, I don't even know if it's possible. Now that I'm getting close to hitting the 1 year mark at my current company, I'm going to be starting to make 401k contributions. This will be the first time in my life where I'll be making 401k contributions. So I'm not very experienced in that area. I know a lot about a lot of different accounts, but I've never had a 401k, so I can't speak from experience. That's what I'm trying to say here. But where was I going with this, man? Lost my train of thought. Oh, maybe being that this is a secondary job that I'd be getting kind of just for extra money, maybe I can contribute. I don't know if it's possible. I would assume it's possible. Maybe I can contribute like 50%. I'm part-time anyway. It's not like the paychecks would be massive. It's not like it would be my primary source of income. And now that I'm transferred a whole lot closer, the only impact this is going to have on me financially is that it's going to save me gas money. That's the only difference. I'm still getting the same hourly rate or same pay or whatever it is at my main job. Nothing changes. It's a different position, same pay, same everything. Nothing changes at all, except I'd be saving on gas money. So I'm already saving money just for them transferring me. But if I get a secondary job, I'd be making a little bit more money that I could definitely use, but I'm not dying without. But if I go and get it, maybe I can contribute like 50% of those pre-taxed part-time dollars to the 401k with that company. And then if and when I stay with that part-time job beyond a year, and I get to the point where, to my understanding, I think I would then become eligible for a company match, even part-time, to my understanding, I could be wrong, then I'll lower it down just so, if it's 5%, I'll lower it down to, 5%. That way I'm at the very least, seeing a 100% rate of return. Just by doing the bare minimum to get that company match. Or who knows what I'm gonna do. I don't know, I'm just thinking out loud over here. Point being is that I have a couple different accounts, and my primary focus right now is to park my dollars into assets. I would rather my post-tax 401k dollars be parked into index funds, tax-advantaged accounts. They're index funds. My Roth IRA to be in 4 different index funds. My Roth IRA, if you are a VIP club member, I call it the VIP club. It's my Patreon page. If anybody's interested in joining the VIP club, what you get is access to thousands and thousands of videos that I've already posted, 0 YouTube commercials, and every time I post a new video, which at the moment and for the last like 6 or 7 years has been every single day, you get early access to it because I post every single video at 4 o'clock in the morning, Eastern Standard Time. Hours and hours and hours before the market's even open. So if I'm talking about something that's relatively time sensitive, you can see it at 4 a.m. Eastern, several hours before the market opens, rather than 5 p.m. Eastern, hours after the market has closed, or an hour after the market has closed. So if that's something that interests you, it also benefits the channel. It allows me to keep making these videos and hopefully make more better videos and improve the quality over time, and maybe even improve the quantity over time, and who knows, maybe bring the live streams back and whatnot. So that's what the VIP club is. It's something that, if you're interested, I'll leave the link in the description. And before I say one last thing about the savings account, or maybe even a couple last things about the savings account, let me just give a quick friendly reminder to please give this video a like. I'd really appreciate it. Hit the like button. Subscribe to the channel if you're new around here. Subscribe to my second channel for bonus videos. Get some DYDSS merchandise to help support the channel. Try out some G Fuel Energy Formula. This right here is the snow cone flavor. They have over 50 different flavors to choose from. This right here is definitely in my top 5. I'm a big fan of snow cone, and with it being, summer right now, this is fantastic. Pro tip, don't just put this in water with ice cubes. Fill the whole thing with ice cubes first. Scoop this in there, then add water. Make it ice cold. Snow cone. It's perfect for summer. Link in the description if anybody wants to try it. You get $5 off your first order by clicking the link in the description. And final reminder to make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. Every month they have a promo going on. This month's promo is if you refer a friend, they're going to give you $20, 2 friends $40, 3 friends $60, 4 friends $100, 5 friends $300, and 6 friends $480 for a grand total of $1,000 cash to invest however you want. Do not pass up on an opportunity. Webull link in the description. Everything is linked in the description. And now, back to the savings account. Like I said before, I don't know 100% what my plan is for the savings account. I don't know when I'm going to be pulling those funds out and parking them elsewhere. And I don't know where exactly I will be parking the funds when I inevitably do pull the funds out. I don't know exactly where it's going to go. I don't know when or where. Or why. Well, why would be one of two things. Number one, when I make a decision on where I think that cash will be best suited, or 2, when interest rates get slashed. In a case like that, it would no longer make sense for me to be generating, less than 3% APY when average, typical, normal inflation is between 2.5%. If I'm making that or less, it wouldn't make sense. For me, in my opinion, needs to be 3% or more for it to make sense. But right now, I don't think real estate is on the map for me at this time. I'm very, very, very new in the company that I'm working at, and I'm waiting to become a little bit more established. I'm already at the top of my bracket. I've already made it to the very top of my bracket. Anything above my current position would be on the administrative level. And that opens up a whole bunch of even more doors, a whole bunch more money, and more opportunities, in which case it would probably make a little bit more sense then to start thinking about real estate. So at this current point in time, I'm not currently thinking about real estate. I have nowhere near enough currency to do that. I could sell the assets that I already have and put it towards real estate if I wanted to. I could absolutely do that, but that's not the plan. I want to be able to get into real estate without selling anything, or without selling much at all, I should say, because I don't plan on selling anything. If I need to, I will, but yeah. So real estate, don't think that's in the cards at the moment. Silver and gold, I could put it in silver and gold, but the problem there is silver and gold don't perform the way that I want them to, which is why it's no longer a priority to me. Every now and then I might pick up a coin if I find one that I like. Fun fact, there is one that I just found out about today that I like, so I'm sure you will see a video on that within the next few weeks, because my plan is to acquire it. Don't want to ruin the surprise, but there is a very, very, very nice, gorgeous coin. It's new. It just came out a couple months ago. That's all I'll say about that, but I do plan on getting a coin like that. But yeah, as for silver and gold, it's not something that I'm interested in at this time. I have zero desire to sell anything. My goal is to not sell anything. Every piece of silver and gold that I've picked up over the years, I am keeping. I do not plan on selling any of it at all, and I hope that I'm never in a position where I'm forced to. So will I sell my silver and gold? I can't say with absolute certainty, no, absolutely not, I will never sell. But I want to never sell. So my plan at the moment is to keep every piece of silver and gold that I've ever picked up. And I view it as more of a hobby at this point, because they don't do what I want them to do. I believe in silver and gold. I believe that they are real, true, honest money. I believe that they are, or can be, an incredible way of preserving wealth long term. I do believe in silver and gold, but in my opinion, I think there are far better options. See, silver and gold, I believe, are an incredible way of saving, incredible way of preserving. They are not a good way of building wealth. They can preserve wealth that you've already built. Yes, absolutely, 100% I believe that. I do not think that they are a very good way at all if you want to build wealth. And right now, that's my priority. I don't want to preserve wealth because I have no wealth to preserve. I am in building mode. I need to build something up first so that later on I can turn around, convert to silver and gold, or probably more so gold at that point, convert it to gold, the powerhouse metal I like to call it, and preserve what I built to protect it. Right now, I don't have much to protect. Right now, my numero uno focus is to build wealth, which is why, for the most part, I'm taking chunks of my paycheck and funneling them into index funds. Oh, I brought up the VIP club for a reason before. I'm not gonna promote it again, but the reason I brought up the VIP club in the first place, which I forgot to even mention, was that if you're interested in knowing what my Roth IRA is made up of, it's 4 different index funds, and it's a 40%, 40%, 10%, 10% split between 4 different index funds. It's been that way since the day I opened it up. If you're interested in knowing the specifics, that's what the VIP club is for. That's what I was supposed to say before, and I completely forgot. So once again, VIP club link in the description if you're interested in that. Moving on. That's what I do with my Roth IRA. 4 different index funds. Every single week, I make a weekly contribution, and I take that cash contribution from my checking account, and I split it up 4 ways. 40, 40, 10, 10, split between 4 completely different kind of index funds. And I also take a portion of my check, and I put it into my dividend growth or dividend income investing portfolio, which I do through Webull. Like I said before, download it, fund your account. They're going to give you up to 12 free fractional shares just for doing so. If you refer anywhere between 1 and 6 friends, they're going to give you a cash bonus. If you do all 6, they're going to give you $1,000 total, which you can invest however you want. Link in the description. And I invest in index funds through my dividend income investing account as well. My regular, it's not tax advantaged. It's just my regular investing app. Every single day, I make a very small contribution to 2 index funds, one of which being the S&P, my favorite. And my plan is to keep it rocking and rolling until the S&P is the foundation, the backbone of my entire investment account. Right now, it's only a little over 5%. A couple months ago, it was only 4%. Like 4% flat, basically. Now it's like 5.1 or 5.2%. My plan is to get that up to, 20, 30, 40%. That's the goal. While also continuing to reinvest dividends through the other index funds and the individual stocks that I currently hold. I'm not really too overly big on the individual stocks at this time. There are some that I really, really like, and I want to grow my positions with those stocks. Sure, there's a handful of those that I'm working on building up a little bit more as well. But for the most part, when it comes to the individuals, for the most part, I just reinvest the dividends from the position I already have. Maybe I'll add a little bit more of my own cash to it to keep the snowball rolling. But my primary focus is on the 2 index funds that I contribute to on a daily basis. So daily basis, 2 index funds. Weekly basis, 4 index funds in a Roth IRA. And a small contribution every week to my savings account, which I'm still trying to figure out what I want to do with. And like I said, coming around full circle here, when it comes to the savings account, being that I don't know exactly, nothing really stands out to me at this time. I mean, it would make a lot of sense for me to just invest it the way that I'm investing on a regular basis, but I didn't know if I wanted to do something a little bit different with it. I didn't know if there was something that was going to stand out. I didn't know if there was something that was going to make sense. I didn't know if there was something that I wanted to start, a new position or a new investment or a new business. I didn't know exactly what I wanted to do. And there are so many different ways that I can go, but right now, not sure. And while I'm still deciding, coincidentally, rates are high. So I'll keep on generating that 4% APY, that 4% interest income for every $100 you have in there. That's $4 a year that they pay you, which isn't very much, but it's actually pretty solid for a savings account. For every $1,000 in there, that's $40 a year. $10,000, that's $400 a year. So it just adds to the snowball. Every time you get a monthly interest payment, it adds to how much you're going to make the following month, assuming that the interest rate remains the same. If the interest rate remains the same, you're going to make even more than your last interest income payment, because the interest income added to how much you have in the account. I don't need to explain that. You understand what I'm talking about there. And obviously, if the rates go up, it's a double whammy in a good way. Your account is a little bit larger than it was last time around, and rates are higher, which means the next pay period, you're going to get paid even more. So that's all that's just the goal right now. I know this video is probably longer than it needed to be, 50 minutes here, but a lot of these videos, like I said in the intro, this is just something to listen to. If you're driving to work, or if you're doing whatever it is that you're doing and you just want to listen to something in the background, that's all these videos are really designed for. And I'm just thinking out loud over here. These videos probably help me more than they help other people, because the more I talk about it, or this is something that I've been saying for a long time. This is why, you know, one of the reasons I make videos and encourage people to leave comments and stuff like that, and we can go back and forth about different ideas. The reason is because the more we're talking about it, the more we're learning about it. So if I hit record and I talk about my savings account and what my goal was originally with it and how my goal changed, and now I don't 100% know what my new goal is, or what my new goal is going to be, or what my new goal should be, the more I talk about it, the more the gears start moving, and I start thinking, I'm like, all right, I could do that, I can do this, here's something I can do. I can keep it going for as long as possible while rates are high, and, you know, eventually get to the point where, you know, if rates get cut, or if rates, you know, something, whatever, I could take that cash out and do what I feel like doing with it. And the only tax that I would have to pay is on the interest income. See, let's just say I put $100,000 in there, which I friggin' wish I had the currency to do that. If I put $100,000 in there, or actually, you know, let me go with a more realistic number. If I put $1,000 in there, I think most people should probably be able to do that. Put $1,000 in there, a year goes by, and you've made $40 in interest income, and then you take it all out. You withdraw it all. You don't have to pay taxes on that $1,040. That $1,000, that was yours in the first place. That nobody touches. You only pay taxes on the $40 of interest income it generated, which is probably not even enough for them to, you know, hit you with a tax on anyway. I don't know for sure exactly how that works. I don't know, but $40, who knows? But that's what I'm talking about here. But instead of $40 being generated, imagine it was $400 or $4,000 in interest income. You only pay taxes on the interest income, the interest that your account generated. You don't pay taxes on the cash that you put in there in the first place. Those were post-tax dollars taken from your paycheck and parked into that account on your own. You do not pay taxes on that. That is your money. The interest income should be your money, but, you know, it's, you know, not entirely. Most of it is. That's the good news. But anyway, at the moment, that's really all I have to say about that. And like I mentioned before, I'm not making this video to promote one of the big banks. I'm not making this video saying that you should have a savings account. In my opinion, I think most people should probably not have savings accounts. It's not something that I agree with long term. It's not something that I believe in long term. It's something that I feel as though you can utilize as a tool to help propel you in the direction that you plan on going in. Whether you want to save up for real estate, whether you want to save up for your next gold coin, whether you want to save up to start a business, whether you want to save up to maybe max out your Roth IRA all in one day, all in one shot. $6,500 right now. So if you want to little by little park it in a savings account, generate some interest income while you're waiting, and then boom, drop $6,500 into a Roth IRA in one go, if that's what you want to do. That's what I believe savings accounts should be for. I think the savings account should be a method of getting you to the next step. I don't think the savings account is the step. I think a savings account is a way of getting you to the next step, if that makes sense. It's all for the short term. Rates are high right now, so it makes sense in more ways than it doesn't make sense. I disagreed and was very, very anti-savings account for the longest time. I wouldn't say that I'm pro-savings account by any means, but if it can help out in certain ways, then sure. If you're unsure of how you want to or what you want to do with the cash, or if you're saving up for something specific, sure, why not? Savings account, it's not a terrible way to go. So anyway, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to savings accounts, do you believe in them? Do you strongly disagree with them? Maybe you're pretty much on the same page as I am right here. You know, worst case scenario, it's providing you with an additional stream of income, even if it's not very much, even if it's a lower APY than the one I'm generating, currently 4% as of this morning. Just yesterday it was 3.9. Maybe you have a similar savings account, maybe it's higher, maybe it's lower, but your goal is kind of the same as mine. Your plan is just park your cash in there while you're waiting, while you're saving up for something, or while you're still trying to figure out what exactly it is that you're saving up for in the first place. Maybe you want to buy a house. Maybe you want to move out of your apartment and into a small house, or maybe you're saving up for a rental property or a fixer-upper, a house to flip. Maybe you want to get into real estate in that way, or maybe you're saving up to dump the cash into a Roth IRA, or maybe you're saving up for some form of an investment, or maybe you're saving up for your next gold coin or silver bar or whatever the case may be. Maybe you're saving up for something. Head on down to the comments and let me know anything and everything related to today's video topic. If you guys enjoyed today's video, please hit that like button. Subscribe if you're new. I post new videos all the time. Subscribe to my second channel, which is my backup channel for exclusive bonus content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, and coffee mugs, a lot of which are helping raise funds and awareness for different charity organizations, and it's a great way of promoting the channel. And also, try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. Over 50 different flavors to choose from, sugar-free, low-calorie. It tastes delicious. This one right here, I'm considering flavor of the month for June 2023. It's snow cone, perfect for the summer. Pro tip, don't just fill up a bottle of water with a couple of ice cubes and a scoop of this. No, fill it up with ice cubes first to the top. Ice cubes, put a scoop in, add some water, shake it up, ice cold. This stuff right here is absolutely delicious. I would say it's absolutely in my top 5 flavors of all time, and it's the flavor of the month for June 2023. $5 off first order by clicking the link in the description. And of course, last but certainly not least, make sure to download Webull and fund your account. They're going to give you up to 12 free fractional shares just for doing so. Even if you deposit as little as a penny, it still works, it still counts, you still get your up to 12 free fractional shares. And for the month of June, the promo that they have going on is if you refer 6 friends, they're going to give you $1,000 cash to invest however you want. First friend's going to get you $20, second friend's going to get you $40, third friend's going to get you $60, fourth is going to get you $100, fifth is going to get you $300, and sixth is going to get you $480 for a grand total of $1,000 to invest however you want. It's part of the advertising budget. It's not just a random amount of cash that, oh, it's coming out, magic, you pull a rabbit out of a hat. No, this is part of their advertising budget. Rather than wasting currency on billboards and TV commercials, they reward the user who used the app for helping build the app with them. It's the way to go. I've always agreed with that. And now that my current favorite stock trading app is doing that, it's just like a win-win-win-win-win. So Webull link in the description. Everything is linked in the description. And I want you guys to head on down in the comments and let me know one more time. What are your thoughts on savings accounts? Do you agree with me? Do you disagree with me? Either way, it doesn't matter. Let's talk about it, because the more we're talking about it, the more we're learning about it. If you're anti-savings account, no matter what the circumstances, let me know. If you are against it for the most part, but you're for it in certain spots, like kind of like myself, Let me know. And if you have a savings account, or if you have ever had a savings account and your goal was just simply to save up for something specific, what is that, or what was that? Was it real estate? Was it a business? Was it silver? Was it gold? Was it for the stock market? Was it to launch a business of some sort? What would you, or what have you used a savings account for? Let me know in the comments. Thank you guys so much for watching. See you next time. Don't you dare stop smiling. Peace.